Road to Recovery. Here's a quick overview of some of our budget highlights. Whilst we know this may not be everyone's cup of tea, it's definitely ours. If you would like a more detailed summary of the budget, or if you wish to discuss how any of the budget changes may affect you, please contact our office and we'll gladly assist. After a year like no other and a world that only vaguely resembles what we once knew as normality, the country, and in fact the world, has been left in uncharted territory. States are locked down, borders are closed, 2/3 of the world's planes are grounded, and the future is uncertain. 12 months ago, this alternative world that we now live in would appear like something from a sci-fi movie. So where to from here? What is the road to recovery? How do we restore jobs? How long will it take for the economy to recover? On the 6th of October 2020, the belated budget was handed down by Josh Frydenberg. Publicised as the most significant federal budget since the Depression, the government's 2020 delivery sets out a roadmap to recovery. So exactly what does this mean? By comparison to many, Australia has managed the COVID-19 pandemic well, but good management isn't enough to protect us from the $213.7 billion deficit in the 2021 financial year. The government has increased its fiscal spending to reduce the impact on Australians under the philosophy that you have to spend money to make money. So what does that mean for all of us? Well, let's have a look at some of the main measures that may impact you in an overview of the 2020 budget. As widely predicted, the government has brought forward Stage 2 of its planned income tax cuts by 2 years. The government is aiming to boost gross domestic product and create jobs. The main feature that bringing forward this personal income tax plan are: increase the top threshold of the 19% tax bracket from $37,000 to $45,000, an increase of the top threshold of the 32.5% tax bracket from $90,000 to $120,000, and the increase of the low income tax offset from $445 to $700. So let's have a look at an example. Mary earns $150,000 per annum. She has private health cover. Her current tax without taking into account deductions would be $46,132. Under the proposed rules, Mary would pay $43,567 in personal income tax. She would receive a tax relief of $2,565. Let's look at another example. John earns $85,000 per annum and has private health cover. His current tax without taking into account deductions would be $20,872. Under the proposed rules, John would pay $18,712 in personal income tax. He would receive tax relief of $2,160. 2 additional economic support payments of $250 each will be made to eligible recipients of the following payments and healthcare card holders. The payments are exempt from taxation and will not count as income support for the purposes of any income support payment. As announced pre-budget on the 6th of October 2020 until the 30th of June 2021, an additional 10,000 places will be available for first home buyers under the new First Home Loan Deposit Scheme to support the purchase of a new home or a newly built home. The scheme enables first home buyers to purchase a home with a deposit as little as 5% without mortgage insurance. There are currently 27 participating lenders across Australia offering places under the First Home Loans Deposit Scheme. What about superannuation? The government has announced that they're going to staple superannuation accounts to an individual. This reform will ensure that individuals continue to use their existing superannuation funds when they change jobs. The fund will be stapled to the individual to prevent the duplication of superannuation fund accounts when changing employers. Effectively, you'll keep the fund when you change jobs, rather than accumulating funds. They've also announced measures to address the issue of accountability of underperforming superannuation funds. So from July 21, APRA will conduct benchmarking tests on the net investment performance of My Super products. With products that have underperformed over 2 consecutive annual tests, will be prohibited from receiving new members into the fund until a further annual test shows that they are no longer underperforming. If a fund is deemed to be underperforming in the first of these annual tests, they will be required to inform their members of the underperformance, and will be required to provide them with information on the Your Super comparison tool. So this is been set forward to make performance of funds transparent. So a new interactive Your Super tool will enable a comparison of simple My Super products ranked by fees and investment returns. What about businesses and employers? So, JobMaker hiring credit will be available to eligible employers over 12 months beginning the 7th of October 2020 for each additional new job they create for an eligible employee. This will provide a maximum of $10,400 per additional new position created. To be eligible, the employee will need to have received job seeker payment, youth allowance payment, or parenting payment for at least one of the 3 months prior to when they are hired. They also announced immediate deductions for investment in capital assets. So basically, the government is wanting businesses to spend, and this measure enables businesses with an aggregate turnover of less than $5 billion to fully expense the cost of a new depreciative asset and the cost of improvements to existing eligible assets in the first year of use. This means that the asset's cost will be fully deductible up front rather than being claimed over the life of the asset. This now also applies to second-hand assets. They've also announced the ability for companies to carry back tax losses. They've also provided access to tax concessions have been extended to businesses with an aggregate turnover of $50 million, and have announced 100,000 new apprenticeships and placements will be provided, and which will mean a business that takes on a new Australian apprentice will also be eligible for a 50% wage subsidy. So whilst the government sets out the budget, it is Parliament that passes the laws to implement any budget announcement. So please remember that these measures are not yet law. At times of uncertainty such as now, it is easy to get overwhelmed by all the information that's out there. Please don't panic. That's what we're here for. Contact our officers with any questions.